Excellent/cheap metro regions to start building your real estate empire. Part 2. Are you looking to continue your real estate empire? Or at least to continue where I left off in the last video on great metropolitan regions to build your empire? To build your real estate portfolio? Well, don't fret. I have 5 more cities that will motivate you to get away from your home job. Buy a house. And buy a house in one of these locales and really kickstart your real estate side hustle. After introduction, of course, I'm Derek West, host of Finance Squared. And if you're the kind of person who loves learning about real estate or stocks or crypto or all of the above, then you found the right place. Leave a comment with where you live and the home prices in that area. And while you're at it, lovingly, tenderly, ever so gently, smash that like button for the YouTube algorithm. It, of course, is much appreciated. So when considering where you want to stake your real estate claim, you want to look for regions and metro areas that have several key qualities. If you're looking for cash flow and long-term growth in property, which is the holy grail of real estate investment, then you need to consider more than just the size of a home and the price per square foot of the home in the region you're analyzing. As a matter of fact, there are several key metrics to analyze. For example, median home value. You want to evaluate the median home value of the city you'll be investing in, and even the neighborhood that you'll be purchasing in. That will tell you the wealth of the residents, and it will also indicate to you the health of the local job market. Higher median home value typically correlates with good job markets. But when considering that, you also want to consider the appreciation in home values. Now, with all investing, past performance does not indicate future growth, but it is a good indicator of close to what you can expect from the current market if trends continue in the right direction. You also want to examine the days on market before going under contract. This will help you to know just about how hot the market is and whether or not it is a buyer's or seller's market. Longer days on the market indicates a buyer's market. Fewer days on the market indicates a seller's market. So be prepared to offer over asking if you're looking to secure the property and you're in a seller's market. Another key metric is rent to price ratio. This metric will help you to predict how much property you invest in will cash flow, if at all. If you can, get metrics on rent increases. They'll help you to get a feel for how much the renting population in the area of the country that you're looking at, how much they're willing to pay and how much they've been paying and increasing their pay, and how much they've been increasing the amount that they pay in rent. You also want to look for metrics about housing affordability. If homes are too expensive where population growth is, that means that there are going to be plenty of people that are looking to rent instead of buy. That metric, combined with population growth rate, will help you to gauge whether there's going to be enough market for the product, that is rental properties, that you're offering to the buying public. Another metric you want to consider is job growth rate. Job growth rate will help you determine whether or not there will be a good influx of people into the region in which you're investing. In other words, whether there will be customers for your rental units. And along with that is unemployment rate. Unemployment rate is just a general all-around good metric for determining the economic health of a metro region. Those are metrics that you should be evaluating before you even take a look at an individual property and determine its cap rate, whether it cash flows, etc. Those metrics will help you determine if the region you're looking to invest in is worth putting your money into, and if investing in that region will be profitable for you. With the basics out of the way, let's continue to look at regions which have some, but not all of those qualities, starting with Detroit. Yeah, I said it, Detroit. The city has been on a steep and steady decline for at least as long as I've been alive. At this point of time, the city may have found a point of stasis, and it may be looking to move in the right direction, especially as high-tech companies like Microsoft and Google are moving into the area and bringing with them workers that can afford to help turn the place around. Because of the steep decline and the unheralded turnaround, you could be in a position to profit handsomely before the rush of investors take notice, giving you the first mover's advantage. Detroit households are 44% renter occupied, and rent prices have increased by 25% over the past 3 years. Low housing prices, rising home values, and rent prices, and a large percentage of renter occupied households mean Detroit is probably the best value in the country for a new real estate investor. Many Detroit neighborhoods have median home values of less than $100,000, meaning you're sure to find a diamond in the rough. But it's not that the values are low, it's that they are starting to rise. Remember the golden rule of investing: buy low, sell high. Over the past year, the typical value of a mid-tier home in Detroit increased by nearly 34%. According to Zillow, Realtor.com ranks Detroit as a buyer's market, meaning that the supply of homes for sale is greater than the demand, indicating that you could be getting in on the ground of a major upside investment. Detroit is not the only Midwestern city that is worth a look. There's also Indianapolis, Indiana. Indianapolis is ranked as one of the top housing markets positioned for growth in 2022. That's according to a report from Realtor.com. Home sales in the metro area are forecast to increase by nearly 15%, while selling prices are predicted to grow by 5.5%. Growing is something Indianapolis has been doing exceptionally well. The population of the city has grown by 8% over the past 10 years, while suburban counties such as Boone and Hendricks have seen population growth of more than 20%. As more and more people and businesses come to the metro area, the demand for housing and rental properties in Indianapolis is growing as well. Median rents for 3-bedroom homes have increased by 12% year over year. That's according to Zumper, and that's as of February 2022. Zillow reports that the typical value of middle-price tier homes grew by 19.8% over the past year through January 2022. The prices of real estate in Indianapolis can fit just about any investor budget. Median prices in some neighborhoods are as low as $95,000 and can be as high as $400,000. Individuals who live in a downtown or adjacent neighborhood, well, they tend to be renters as well. You will also find that population growth and job growth indicates that Indianapolis is on the rise, and that is one of the top places to be in the Midwest. In January 2022, the median listing price of a home in the Metropolitan Indianapolis region was $119,000, an increase of 18.4% year over year, according to Realtor.com. Those home prices mean that investors will soon be licking their chops to find properties that they can turn into good real estate rentals. Are you starting to notice a trend? Well, if not, let's take a look at the next city on the list, Milwaukee, Wisconsin. The truth of the matter is you're going to find a lot of value in Midwest towns and cities. Cities in the South and the Southwest have been getting attention for their rising property prices, but towns in the Midwest have been rising as well. This part is key though. At the same time, they can be affordable for your newer real estate investor. And Milwaukee is right in line with that. Between July 2021 and December 2021, unemployment decreased by more than 50% and currently stands at 2.2%. Even though home prices in Milwaukee are still relatively affordable, many neighborhoods in Milwaukee and surrounding suburbs have more renters than homeowners. For example, the Yankee Hill neighborhood near downtown is popular, and nearly 90% of the homes are occupied by renters. Over the past 12 months, the value of middle-priced tier homes in the Milwaukee area have increased by 14.5%. Milwaukee is also a popular place for renting. According to Zumper, 56% of households are renter-occupied, and median rents of 3-bedroom homes in Milwaukee, well, they've grown by nearly 70% year over year. Keep in mind that median home prices in some Milwaukee neighborhoods can be as low as $94,000 and can get as high as the low $500,000 mark, making it a good place for entry-level real estate investors to get their feet wet before they tackle even larger markets. Now let's stay in the Midwest, but head a little further southwest and take a look at Kansas City, Missouri. Are you aware that Kansas City is not even in Kansas? Well, don't let that little geography question keep you from considering it a good place to invest in real estate. Kansas City is one of the 12 hottest housing markets for 2022. According to research from Realtor.com anyway, combined sales volume and price growth, well, it's projected to increase by 15.7% this year, which could mean more competition for investors looking for rental property. Home values in the metro area, well, they increased by over 70% year over year, while rents for 3-bedroom homes also went up by 17%. Although home prices in Kansas City are still relatively affordable compared to other metro areas, Zumper reports that 45% of households are occupied by renters. Kansas City is a major transportation center and a hub for high-growth tech sectors like finance and information technology. In fact, Kansas City is ranked among the top 15 large metro areas with the most technology jobs per capita, and is home to nearly 4,000 technology companies in the Kansas City metro area. Population and job growth, they also drive the demand for housing and rental properties in Kansas City and the surrounding suburbs. The value of a middle-priced tier home increased by 70.6% over the past year, according to Zillow. At the same time, median rents for 3-bedroom homes have gone up by 17% year over year. Let's diverge from the trend a little bit to take a look at our last metropolitan area to invest in. I'm talking about Jacksonville, Florida. If you're looking for a market with strong population growth, rising home prices that are nevertheless still affordable, and double-digit rent growth, you're definitely going to want to look at Jacksonville, Florida. Home values in Jacksonville increased by more than 27% over the past year, and many of the best neighborhoods in the metropolitan area have more renters than homeowners. Although home values in Jacksonville grew by more than 27% over the past year, they're still relatively affordable. According to Zillow, the value of a median price tier home is $273,000. As with many of the best real estate markets in Florida, there's a shortage of inventory, keeping the demand for rental property in Jacksonville strong and steady. Rents for a 3-bedroom home in the metro area, well, they increased by 18% year over year, according to the most recent February 15th, 2022 data from Zumper. So there it is. 5 more great cities to look into if you want to start your real estate empire. Leave a comment letting us know if these 5 cities are on your radar. If not, what cities are you looking at? Are you just getting started in real estate investment? Don't worry, everyone starts somewhere. Leave a comment and let us know where you are on your journey. And be sure to like this video if you liked this video. and make sure to subscribe and turn on post notifications for more discussions on all the fun things of personal finance, including stocks, real estate, and crypto. Share this video with your friends who are looking to invest in real estate, and even the ones who just don't have a clue. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. I'll catch you guys in the next video. Peace.